The actually really interesting session as well is focusing more on a topic that was talked during the circular disruption. So how we really scale circular economy. And so one important point is financing the circular economy. So on this topic, I would like to invite here to talk Sebastiano Silvestri, should be connected online. Antonio Garufi, fund manager of Decalia. That is a private equity investment fund, and he's focusing on circular economy. And I would like to start with Sebastiano. Hi, Sebastiano.
Can you Morning, everybody. Thank you.
Hi. Great. So first of all, can you probably describe me a little bit more about your CVC? Sebastiano is the CVC manager of A2A. So what are you actually doing, and what are your investments on the circular economy, and what is your expectation for the future? What are your targets? If you can say something to us, what are your plans? I know, of course, you cannot say who you're really targeting, but at least macro area where you would be interested in investing. So maybe some startup can reach you out.
Oh, sure. Thank you very much for the invite. I also have a couple of slides, but
you can share. You can share. There is no problem.
Fantastic. So I can give you a better view of our corporate venture capital activity. Going straight to the point. Let me know if you see the slides.
Yeah, we see it.
Okay, fantastic. So, no, first of all, we launched our corporate venture capital activity back in 2019. So we decided to go in this direction with let's say a hybrid model. As you can see, we intended our CVC as a program that included a lot of partners. In this case, you can see 360 Capital, which is a main VC firm in Italy and in France, with let's say a European reach, with different funds that I'm going to tell you about in a second. And then Eureka, which is another Italian fund that is focused on technology transfer, pre-seed and seed ventures. Our focus, as you can imagine, as A2A, was to invest in strategic startups working around the world of energy transition, and specifically today we're going to talk about it, circular economy. How we did it, the main fund that we are, let's say, operating in partnership with 360 Capital is the third one that you see in the slide, which is called A+ 360, and it's a fund that is completely dedicated to these two topics, and in which I work as in secondment with a 360 Capital team. This fund, came into operation in 2020, and since then we invested in 7 companies, 2 of which are focused on circular economy, and I'm going to show you and tell you about it later. So this fund is, as from investment policies view, is focused on European ventures, seed and Series A, and we really believe that having this VC arm in which A2A is a single LP, but has a certain, let's say, level of engagement and governance together with 360 was the best way to be, first of all, attractive, because I don't think that A2A Ventures, since it's not, his job for A2A, would have been the real way to go into the market. And, with this fund, we believe that we could be in the next years to be a real, let's say, partner for startups, not only for financing, which is the first, one of the first needs of startups when they grow, but also as a client, because our aim is to be also an industrial partners that works in synergy with the portfolio. Out of the 7 companies that we invested in, almost 6 out of 7, let's say, but it's just a matter of time, are working with A2A, with A2A business units. So from our perspective, it's a win-win situation, because we provide financial advisory through 360 Capital and industrial advisory through A2A. So the other funds in which invested in are, as let's say, limited partner, are other funds from 360 Capital, one of which is Poly 360, which rotates around the Politecnico of Milano and the PolyHub incubator. And then, as we were saying before, the Eureka Fund. We believe that, you know, throughout this program, we can tackle the whole value chain in venture, in early stage venture startups, venture capital startups, and you know, to be of real support for the ecosystem. Going really quick, and tell me how much time I had, because I guess a couple of minutes, and then I let the other.
It's fine. You're going very quick, but
okay.
It's fine. You have time. So one is circular materials. We saw it.
Fantastic. So I know
last year there was also Grey Parrot. So we know both quite well.
Fantastic. So maybe a couple of words of Grey Parrot. I know that you know them well, but for those who don't know it, Grey Parrot is a UK startup in which we invested in 2020, it's let's say a software company. It's a between of a hardware and software company, because it's composed of 3 main elements. It's let's say a vision camera that is located on conveyor belts in sorting facilities, which detects all the images of the materials that are sorted. An AI software that through computer vision analyzes the type of materials that flow, and then a dashboard that is really useful for plant managers in order to understand the type and the characteristics of the materials that we sort, that most of the times are analyzed manually. Going back to the slide that I had before, this company was selected through a partner of ours, which is called Plug and Play. Since the beginning, we understood the value of the company, and we decided to take it to our investment committee, and through our A+ 360 fund, we decided to invest it. Meanwhile, we were in discussions with our business units, in which we tested the potential of this technology. And as you can see from the slide, the results of the first POC back in 2020 and 2021 were really amazing. So we reached a 98% accuracy on the material recognition, and now the software is able to detect more than 50 types of different materials that go through our conveyor belts. So through this application, we decided to extend the partnership with Grey Parrot, and we extended the application throughout different lines within our plant here in close to Milano. So we really believe that AI and software solutions like this could really enhance the activities of sorting facilities within our plants. And last but not least, the company is doing really well and is now raising Series A round. And we really believe that for the future, Grey Parrot has the potential to scale globally and be really relevant to tackle circular economy. I don't know if you can say something about circular, but if you already talk about it, I don't know. I would.
Circular material, very quick. It came something like half an hour ago, maybe a little bit more. So it really presented the project
Okay,
And,
so that's fantastic. Just to let you know that we invested in it back in 2020. We really believe that this company also could tackle another side of the circular economy space. In this case, as you understood, the recovery of pressure and heavy material and heavy metals. It is something that A2A is invested in as well. Through M&A activities, and we really believe that the circular could integrate our operations and our activities within this space.
Perfect. And one question, so about the future, as I said before, what is, I'll let you explain this part of the framework and a little bit, and I think it's very important.
No, first of all, before answering your question about your future investments, I think that together with our corporate venture capital activity, is really important to, as a corporate, so not just as an investor, but as a corporate, to simplify the way we work with startups, financing them not only through investment funds, but also through collaborations and projects. And as you can see from the slide, we launched last year our startup kit, which is a framework that helps to simplify our relationship with a startup, which is not a simple supplier, but a partner in our view. So regarding funding, in finance, as you can see, we decided to insert a couple of measures that we believe were pretty helpful to make everything seamless. So two of which are 50% paid up front while we sign the contract, which, as you can imagine, is something really important for a small startup, and the reduction of payment terms to 30 days. Sometimes these terms can be up to 120, which is nothing good for a startup. And everything related to the digital experience and a simplified contract, the light qualification, and single point of reference with the A2A innovation managers were other conditions that we thought were really, really helpful for our collaboration. For the future, as you might know, for A2A, energy transition and circular economy are two of the most important topics. I would say that the two most important pillars for our industrial plan. There is a 10 years industrial plan. So we are looking for circular economy startups within the European space, and we believe that going through advanced materials, new packaging materials, new circular approach solutions are completely in line with our investment policy, and really looking forward to find interesting startups within this space.
Great, but just a question: do you think that the number of startups on this topic is growing? Do you see a trend in it, and that the capital that are raising are growing? What is the trend you see?
No, in Italy for sure are growing, and we are looking, in recent months, a growing number of startups that are working in this space. I think that together with the energy transition, these two are the main topics in which a lot of new funds, especially not only in Italy, but especially in Europe, are focusing on. There are more and more funds that are completely dedicated on impact startups working on circular economy. So I believe that in the next years, and with the, let's say, the growing ecosystem that is developing in Italy, we will have more and more opportunities to invest in. Still, we are lacking, a bigger deal flow in Italy compared to other countries, but as everybody knows. But I'm really positive on you know, on the growing numbers of startups that will work within this space.
Okay, perfect, Sebastiano. Thank you. I would
Thank you.
move to Antonio. First of all, thanks, Antonio, for coming here to Milan from Switzerland, right? Yeah, you can use that one. Yeah, they will activate it. Like the previous speaker, I would like to know a little bit more about Decalia in general. So probably what you're doing on a general overview, then more specifically on circular economy, and something probably also about the future. I know it's always not easy to open about the future, but seeing a little bit more the areas you would like to move, or probably the project you're looking for. Of course, the size of the project you're looking for is a little bit different than the size I was looking for. So I'll let you speak.
Hello, can you hear me? Well, good. Okay, first of all, thanks a lot for the invitation. It's very nice to be here. I have come yesterday from Geneva in Switzerland, which is another country, but it's not so far. So I represent Decalia. We have a circular economy dedicated fund, which I manage since 2018. It's very interesting to see that now circular economy is coming, the awareness on the theme is becoming really, really high. Whereas when we launched the fund in 2018, it was a bit of a new concept, and every time I was speaking to investors, I had to explain everything. But now is also part as a pillar of the European Union Green Deal, and it's been also quoted on several public occasions and documents. So that's very comforting for us, because when we launched, we felt a bit like the pioneers it was the first fund dedicated to the theme globally. And so it was a bet, and you never know when you're a pioneer, you do a bet if you are right or not. So I think what you guys are doing here, and also the interest and the awareness on the theme, it's something that it makes sense. Let me start a bit with description of our firm. We are based in Geneva, and we have an office in Milan and Zurich as well. We've let's say launched the firm almost 7 years ago now. We manage around 5 billion under management between wealth management, asset management, of which I am part with the funds, and illiquid investments, so private equity, which is another, let's say, department on which there are a lot of synergies with us, because we do listed companies, they do mostly private and illiquid investments. So the Circular Economy Fund is part of the effort to become, let's say, a thematic investor. So we look at long-term structural themes that are investable and that can create value over time. And I think personally that the circular economy is a very good theme to be invested in. First of all, because it's very long-term, it is structural, and it is not too niche, because circular economy business models can be found across almost all sectors. The way we think about it when we invest is we divide our universe and our fund in 3 buckets. So the first one being the pure players, so those companies that have already implemented a circular business model. Second, what we call transitioning/beneficiaries, so those companies that have, let's say, a benefit from the transition happening, and that could be, for example, sustainable packaging companies, these type of businesses that are not, let's say, too cool recycling or specifically circular, but can benefit from a business opportunity coming from the transition. And third, last but not least, I would say, is the enablers companies. So those that can provide services, goods, advice, technologies to accelerate the transition, therefore to create more business opportunities. And here we can find, let's say, unusual suspects like cloud companies, logistics. We've invested, for example, in a very interesting labels, etiquettes company in the US that also has RFID etiquettes and that are really helping into the reverse logistics, which is one of the most interesting parts of the circular economy. Our fund is global, so we can invest on all the stock markets, but we are mostly focused on developed markets. So the majority of our fund is US companies. Then I would say around 25–30% Europe, including the UK and Switzerland, even though they don't want to be European, but we consider them as Europe continent. And 10% Japan, because Japan is a very interesting market, I think, for automation, for also we have an investment in a second-hand marketplace. So this is a very interesting topic, I think, and please stop me if I'm being too long. And you also, I mean, let's make it a dialogue as well with the others. So marketplaces and sharing platforms, I think, are one of the most interesting business models of the circular economy. Why? Well, as, let's say, thematic investor, as a thematic investor, they are really fitting our theme, because if second-hand commerce and buying and selling becomes mainstream, we can save a lot of raw materials. We can keep products into the loop for longer time. And this is extremely good for the environment. It is something that is actually booming, especially in fashion or house goods. All the changes in consumption that we see in the States, we're seeing an increase, for example, in renting house goods like electronics, PlayStations, furniture, all the stuff that you have at home. Instead of buying it, you rent it, and when you want to change it, you just say, okay, we'll keep buying the rent, and the company sends you the new model, for example. Also because the US is, from my experience when I used to live there, a very nomad country, because people tend to move a lot for college and then go back to their home state, and then they go work somewhere else. And every time you move, it's good to not have too much baggage to move around. So that is also a consumption of business model, or either you sell secondhand all the stuff you don't use anymore. And as a thematic investor, it really makes sense. But, you know, we are not an ONG. We have to deliver substantial returns in the long term for our investors. So we want to invest in good business models. So we think the circular economy is not a marketing tool for us, but is a way to increase returns and really make substantial outperformance of long-term market indexes. And marketplaces fit into this framework as well. Why? Well, they have several characteristics that I think are paramount to create compounding long-term returns. First of all, they have very high margins because they're a transaction business. Let's say you sell something on eBay, eBay doesn't do any inventory and they take some commission out of it. Or Etsy is another an investment we have in the US. You probably know they bought a very big startup, one of the first unicorns made in Italy, Depop, for vintage fashion. And so they take a commission, they have basically a zero cost of goods sold. The platform, once it is set up, it's highly scalable. So if you have 1 million transactions or 5 million transactions, is more or less the same. You have some marketing spending, but if this business model becomes a niche player, it can also generate what we call the network effects. So when we look for good competitive advantages in companies, the network effect is one of the best, I think, competitive advantages. Why? Because the company doesn't have to invest capital to sustain it in the long term. So once you become the top marketplace for a specific niche, which can be house goods or let's say sport goods or whatever, or cars, we also are very interested in second-hand cars, by the way.
Yeah. And today, later on, we have also Subito, which is a really kind of example of a marketplace, even though it's not really doing actually the transition. So it's not probably the kind of model you're talking about. But I'm really interested in one model you talked, because I always thought about it. And I think it has some risky, but I think it's definitely interesting. The one of the renting, no? Because it has potential financial stress, no? Because they first have to buy, no? So they have a financial exposition, and then so the cash in is much longer, and they have a risk that actually the product can be damaged, and you don't know actually how much can live. But I saw Grover, that is a very interesting company. They just got $1 billion, so and that is they are going quite well. And I want to a little bit more know a little bit more your point of view on that, especially on this financial side. If you analyze some of them, what is your point of view?
Yes, very, I think, good question. So one of the business models that we like is the change in ownership, right? So in the last, let's say, 100 years, companies or private individuals, to use something, you had to buy it, right? Since a few years ago, you're starting to be sharing platforms or subscription models. So for example, even airlines now, they don't buy the engines anymore. They pay, they call it fly by the hour. So you pay for how long you fly. And this includes maintenance and other services that are very, very high value and, let's say, high margin type of services. So from the financial point of view, it is true that the company that rents something, it first needs to invest in the production of the good or the project, the R&D. So there's a lot of upfront investment. That's where the financial institutions come handy, because they need to provide the capital, and for them it's very lucrative to provide, let's say, the working capital, which is a very important part of the industrial system. But what happens is, if you are a company that has recurring revenues, which come from the renting or subscription model, your income statement becomes, let's say, more flexible, and investors less cyclical, by the way, because your cost of goods sold is then, let's say, is a monthly subscription. You have a different accounting. And what happens is that if you have more recurring revenues, a different type of investor comes to be interested in your stock, in your company, and is, let's say, keen to pay a higher multiple for the stock. So we think that the transition from a, let's say, more cyclical business model, which is typical of the industrial, let's say, revolution of the last century, so let's say take, make, and waste, no, to take and then rent to the consumer or other companies as well, it's a more flexible business model that can attract more capital, and more capital means your cost of capital goes down and your valuation, your multiple goes up, and then the stock can benefit from this. And we've seen it, for example, with very famous companies that are starting to recondition and rent their products, such as Caterpillar, probably a name everybody knows, where they don't say how much of the revenue comes from reconditioned goods. And on this note, leasing also comes handy, because it's a way of creating a more recurring revenue base. And this has changed the auto industry 20 years ago, and is now changing also some other industry. Also real estate, by the way, where the model of rent, let's say to buy, it's called, where you rent, and then when you want to purchase, the rent you paid is then taken off your purchase price. That's a very interesting model. I think that will gain more traction.
Yeah, it's gaining a lot of traction also, that one.
Yeah, and I think it's very good for the consumer too.
Good. Thanks for your point of view on this. I think it's a really interesting future on this part of the renting.